Today you're going to learn if you should be focusing more on stocks or real estate. In this video, we're going to determine which investment strategy is best for you based off of the timelines you have for your goals. So for me personally, my goal was to achieve financial freedom by the age of 30, and now I made this goal whenever I was 24. So I'm 27 now, so 3 years later, I was able to achieve financial freedom. That was strictly through real estate. Honestly, I could have achieved it sooner if I knew what I knew today, and I'm going to show you what I know today in this video so you can possibly achieve your financial freedom sooner. With that being said, if you're ready to learn if it's either stocks or real estate that is best for you, go ahead and hit that like button for me and turn it blue. And while you're down there, hit that subscribe button, click the bell icon to get notified when I upload a new video just like this one. First, we're going to go over some pros and cons of real estate and stocks. And then after that, we're going to go over which investment strategy is best for you. Let's start with real estate. Now, one of the biggest pros for real estate is actually the ROI. Here's the example, and this is real world. This is what happened to me. So 3 years ago, whenever I started my real estate investing journey, I was able to save up $8,000. I was able to borrow $7,000 from my wife. So in total, we had $15,000. We bought our very first property, and ultimately we turned that $15,000 into $43,000. So we tripled it in 1 year. But that's not the only property that we bought. A month after we bought that first property, we bought another property for 0% down. This specific property that we were able to get for 0% down, it profited us $61,000. Altogether, we were able to pull in $104,000 in our first year of investing in real estate. On our first property, the one where you turned $15,000 into $43,000, we tripled our money. So that's a 300% ROI. On the second property, we didn't put any money down on the property. So that return is infinite. Now, let's say we put that $15,000 inside the stock market rather than buying our first property. Now, with the stock market averaging about a 10% return, not adjusting for inflation, let's say we made 10%. So 10% on $15,000 is $1,500. So which would you rather have? $1,500 or $104,000, because that's what we made in real estate, and that's what we would have made if we put it in the stock market. That leads me to the next big pro for real estate, and that is leverage. Here's how leverage works in a nutshell. Let's say, for example, you're house hacking, you put 3.5% down on a property. You're leveraging 96.5% of someone else's money, and that's also known as the bank. Wrap your head around this for a second. So if you bought a duplex for $100,000, you utilized a low down payment method with an FHA loan, so you're putting 3.5% down. That's $3,500. If that property appreciates by 10%, it's not appreciating by the $3,500 you put down on the property, it's appreciating by the value of the property, so $100,000. So if you were to put that $3,500 inside the stock market on a 10% return, you'd be getting $350 on that $3,500 investment. And now you're putting that money into real estate, you're able to get appreciation off the entire value of the property, not just the money that you put down. But wait, there's more. Whenever you're leveraging someone else's money, like the bank, you can write off that interest rate off the income that you're getting from that property. With stocks, yeah, you can leverage your money on margin, but that's typically a lot higher of a risk. Another obvious advantage that real estate has over stocks is cash flow. And now you could make the argument that stocks, they pay dividends, but let's compare the two really quick. You're going to tell me which is better. Let's say we have $100,000 to invest, and we're going to put $100,000 into Coca-Cola because historically that is a great dividend stock, and you're going to be getting a 2.96% dividend yield a year. That's at the time of this recording. And now, so if we have $100,000 invested in Coca-Cola and they're paying us a 2.96% dividend yield, that means that we're going to be making $2,960 a year. Now let's take that same $100,000 and let's do a real life example that I was able to do that we talked about earlier, where I put $15,000 down on a property and I was making $700 a month in pure cash flow. Didn't rehab the property, didn't need to find an off-market property. This property was on the MLS. It was just a normal property. So let's take that $700 a month I was making in pure cash flow and annualize it. So times it by 12, that's $8,400. Now, but wait, there's more. We only spent $15,000 of the $100,000 we had in this pool. So we have $85,000 left. Let's assume that everything's exactly the same because there's no way to tell. So I'm making $700 a month in pure cash flow on per property, and I'm putting $15,000 on it per property. So with an additional 5 properties, I'm going to be making $3,500 in cash flow. Now we're just going to add on to the first property because in total we have 6 properties. So with 6 properties, multiply that by $700 a month in cash flow, we're making $4,200, or roughly about $50,000 a year. This doesn't even include the principal paydown, the tax benefits of investing in real estate, and the appreciation of real estate. Remember, the Coca-Cola stock that we invested $100,000 into only paid us $2,960, whereas when we invested $100,000 into real estate, we're making $4,200 every single month. So which would you rather have? $2,960 a year or $50,000 a year? But there's one big con to investing in real estate that we haven't mentioned, and that is the barrier to entry for investment properties. Now, I know you can make the argument that, you could utilize a low down payment of 3.5 to 5% down like we talked about earlier, or you could use private funds, or you could get hard money lenders, etc. But generally speaking, you're gonna be putting 20 to 25% down on a property, and most people do not have that. So it's a lot easier to get started with stocks because it's literally just a few clicks on your phone and you can buy a piece of stock than investing in real estate, because there is a lot longer process to investing in real estate. Now, the only pro that I can see for stocks whenever we're comparing real estate and stocks is that stocks tend to be a lot more passive. What I mean by that is you didn't have to do anything other than clicking a few buttons on your phone to execute an order and you purchase the stock. Of course, you need to do a lot of research on the company you're wanting to buy some stocks from, but other than that, you didn't have to do anything past that. Now, you can, however, make real estate just as passive, but it's not naturally that way. And if you're wanting to know how you can get those crazy returns like I have and not have to spend tens of thousands of dollars on down payment on the property, and how to make real estate investing just as passive as dividends, there's gonna be a video popping up right here that shows you exactly how to do that. So if you're interested, go check out that video. Until the next video, I'm out. See ya.